Welcome back to Stocks by the Numbers. We're back in action here. I wanted to look at another company that someone in the Discord asked me to take a look at, ENGlobal, ticker symbol ENG, listed here on the NASDAQ. Now, this company has been really struggling for the last couple of years, as you see here. Had a big pump up here at the end of 2020 going into 2021, hit almost $10 a share, and then has since kind of been bouncing downward, really getting crushed, sitting here at 44 cents a share, down about 1% the other day. And long story short, this company is actually fighting to regain compliance here if you do a little research on the stock here. Now, this company, I believe it was December 21st or something. So this company, no, the 19th, I think it was the 19th, right here. They got notice that, now for 180 days, they had to have 10 consecutive days above $1 to regain NASDAQ compliance. As you see here, here is the $1 mark. The stock jumped up. It's only about 3 or 4 days above $1. Excuse me, and then it completely crashed down, as you see here, hit a low of about 30 cents, and then kind of bounced off there. We've been in this upward channel, really, for about the last 2 or 3 months. And basically, I have these big breakouts and these little projected paths drawn out here for you guys because a couple of things going on, okay? First of all, here, you can look at the estimates here in the revenue, 14.955 million. And if you look at the forecast of these earnings coming in and supposedly what Wall Street expects, right about now or potentially 3 months from this period, so that would be about November, mid-November. So that would be inside of the next 2 to 5 months. Okay, this is the next earnings report also in November. So in the next 2 to 5 months, something could potentially happen with this stock, and it could really begin to climb and break out here from these low levels here. And the reason being is because they're really forecasting huge things for this stock here. If we switch over here to the earnings estimates, look at this. Again, the company's struggling, basically negative for years, going all the way back to 2021. And now you can see the estimates coming in here for Q2 of 23. They're estimating 2 cents a share the company is going to report. And then moving forward after that, 10 cents, 12 cents a share, 22 cents a share. And just look at the way the revenue is projected to break out here. Again, this is a big quarter. This and the next quarter here are going to be very, very telling as to what direction they bring this company in. Okay, and right here you can see estimates up at 14.96 million. Okay, highest estimates going all the way back to 21. And again, you can see here for the last couple of quarters, they've been looking and projecting for 14 plus million. Now, obviously, the company came in with a big miss here in Q4 of 22, but last quarter here, Q1 of 23, they only missed by about, 1.35 million. So if they're now able to come in above these projections, and they come in with 15.5, whatever, 16.2, 17.1, if they really come out and the revenue pops like they're projecting here, then the stock can easily, again, here at the apex, right here near these earnings, it could run up and potentially break out of this resistance here at roughly 70 cents, and it could potentially get back to that dollar range and try to stay in here, maybe going into next earnings report as well, and regain compliance. This is very interesting, though, because I didn't even time this, but today is the 18th, and it was December 19th when they got issued that warning that they had to regain NASDAQ compliance. And it's 180 days, which brings us to June 19th, which is tomorrow. So that's why I'm really unsure as to where they really want to bring this, because it says that you can ask for another 180-day extension, okay? And that's what this black circle is here. Another 180 days would bring you to December 19th of this year, right? So technically, if they, again, file for that extension, then this is the last date to which they need those 10 consecutive trading days above $1. Okay, so hypothetically, right, it's probably going to run up and potentially stay in this channel here. However, again, it's right here. It bounced right off this bottom trend line of this channel it's been in for a few months. And now, again, tomorrow, even though the markets are closed, tomorrow technically is the end of that 180 days. So I don't know if it's going to run up here and bounce going into earnings and stay in that channel, or if it could potentially break in the next couple of days and start to kind of ride this bottom trend line before running up a little bit going into earnings into August. However, again, it needs to be 10 consecutive trading days, and technically here I think was about 3 or 4. So technically in the last 180 days that they have been given to regain compliance, they have not regained compliance. So again, that's why I'm saying this next 1 to 2 earnings reports are really going to determine where they want to bring this stock. Because the next quarter, again, 14.9 million, if they come in above those estimates, then of course the stock is really going to move. But look at the next quarter, 39.12 million for Q3 of 23. So now we're hovering around, 8, 10, 13 million, and then we're supposed to pop up to 15, and then we're supposed to pop up to north of 39. And obviously, if you continue down the road, look at this, almost 45 million, over 76 million for Q1 of 24. So that's why they're really anticipating bigger and better things for this company moving forward. Right here they reported a loss of 52 cents a share. And look, for 23, there's supposedly estimates of 24 cents a share, and then moving to 2024, almost $1 a share. And the growth in revenue is pretty astronomical here. We're going from about 40 million to north of 110 million to north of 300 million. And if you look at the trajectory that the company was on here before 2020 happened, you can see that off of a little less than 65 million, the company profit margin was only minus 1%, which probably means that if they can get revenue up to like 70, 75 million, they're going to be profitable, which is why they're forecasting a profitable year all around in 2023, because again, if they come in north of 110, 113 million here, they probably will be profitable with a profit margin of whatever, 4.5%, 6.5%, whatever it might be. And then, of course, when they turn net income positive, that is just going to be even more fuel to add to the fire, and that's going to make them run up as well. But, a lot of people want to discount some of the numbers here. And, of course, when these metrics are bad, the stock has to react that way as well. So as you see, a lot of these numbers are trending downward here. The gross margin percentage was at about minus 3% after it was double-digit positive, and now, of course, it's sitting here at about minus 15%. Operating margin headed more negative, along with the EBITDA and the net margin percentage. So that's why, again, a couple of these things don't really look too hot for the stock. However, if these projections are on path and the company is potentially able, again, in the next 1-2 quarters to meet these pumps in revenue, even if they fall a little shy, in my opinion, there's really no reason as to why they shouldn't get this back above that $1 level. So, again, I'm coming to you late, and supposedly the 180 days, again, expires like tomorrow. So, again, I hope that they grant the extension, because I'm sure there are a lot of people involved. I know I had a couple of people ask me about this symbol. So if you did get involved again here in, like the last year or so, you're definitely pretty stressed out here. But again, if this company is able to deliver on these projections here, 14.95, and then again, moving forward of whatever it was, 32 million or something, obviously that is going to break the stock out, and 39 million. And obviously, again, that's going to break the stock out and bring it back up to where it was here, maybe, well over $1 and potentially into the twos, because again, right now market cap 17.5 million, and even though the company is struggling, they brought in 40 million last year. So I believe assets are outweighing liabilities here. If we just check quickly, yeah, see, we got like 30 million in assets and like 19, 20 million in liabilities. So, again, we do have some positives. We do have some negatives. You could see the debt bouncing around, got up to about 8.5, got back down to 6.4. Now it's back up to about 10.7. And, of course, the cash flow has been taking a little bit of a hit. So that's why there are some negatives on the back burner. So I can kind of appreciate why they're beating the stock up a little bit. However, at the same time, it's all going to happen inside of the next few months. That's why, as you see, I have these big green arrows and these paths laid out. So in my opinion, it's probably going to stay, hopefully, inside of this upward channel path and potentially get back to about 60, 65 cents maybe going into this earnings report. And then if everything goes according to plan, it could break out and try to retest that $1 range. If numbers come in light, obviously you see I have this kind of projected path. They're kind of going to bounce it around, probably bring it down to this bottom trend line and bounce it up and down off of these fibs before having it bounce off the bottom and just kind of slowly trickle up going into next quarter's earnings, as you see here, about November 10th or 12th, whenever it's going to be. And then that's the $39 million quarter, and that's what I'm saying. If it doesn't happen here, and then boom, this quarter the company posts like $41.5 million, $42 million, boom, that's when you're going to have your breakout, and it's going to all meet up right here at the $1 level. And again, really going back even long term, for a very long time here, if it goes up to this blue line at around $1 and hopefully does that 10 consecutive days of trading above $1, even if it dips down and rides this top trend line down, this whole overall blue pattern here is basically a descending wedge. So we have a lot of wedges happening right now, except obviously the upward channel that it's in. And that's why, again, it could break out here and even pull back, but still overall going into 2024, it looks like the tail end perhaps. That's when, they can take it even higher. But basically right now, the company needs to post good earnings. That is what it is all going to come down to. The fact that a lot of people may like it or people may be talking about it in all of these forums, again, all of that is irrelevant. They had 180 days to get back above $1. They only did it for 3 or 4 days, not 10 consecutive days like they asked. They're allowed to get a 180-day extension, which would be from tomorrow to right here, December 19th. And in this time frame now of this next 180 days, the stock has to trade above $1 for 10 consecutive trading sessions to maintain NASDAQ listing compliance. So right now it's all in the company's hands, but even if you look up some of the news here on the company, you can see going back that they signed a couple of, where was it? Well, yeah, here, obviously, offering new shares and whatnot. That doesn't help the value of the stock either. But here, look, ENGlobal awarded $9 million renewable fuel project contract by Canadian Reconciliation Energy Transition. So that's why they are still bringing in several million. ENGlobal unit secures $2.6 million task order from $20 million contract with U.S. Army Corps of Engineers. So that's what I mean. We do have a couple of millions trickling in, but again, they are anticipating bigger and better things, not only this quarter, but basically every quarter moving forward. And if the company could even get kind of close to these projections, I think they're going to reward the stock because they have beaten it up again for quite some time. And yes, I understand all new offerings and everything like that, but again, numbers don't lie. The proof is in the pudding. And if the company is growing and they're getting on track and they begin to consistently increase this revenue, even if it's coming in a little bit light here at the beginning of the waterfall, let's say, obviously there's going to be even more increased power at the end of the waterfall. Now, obviously, that made absolutely no sense. That was a terrible metaphor. But at the end of the day, more money that comes in, the better the stock does, really. So, again, it's really all up to the company here. Moving over here to stock charts, you can see the MACD recently crossed to the downside. We're sitting here with an RSI of about 46. However, going back to, looks like the end of May, since then the stock has stayed above the 50-day moving average right here of about 42 cents. So that's why, again, that may be your support level, and then we may just keep bouncing upward again, going up towards the mid-50s into the 60s and whatnot, going into that earnings report. So we could kind of maintain or potentially increase from these levels here, in my opinion. And switching over here to the weekly, we have an RSI sub 39. MACD relatively flat right here, and again, you can see it's been in this upward channel. I really don't think it's going to get back up here to about 90 cents because it's just not in the chart. But again, if we do bounce around and follow this trajectory, you can see, 60, 66, maybe even touching the top trend line here of 70 cents on high, eager, positive anticipation of these earnings reports. But of course, if they come in light here, then yeah, after bringing it up to 65, 70 cents, they will probably immediately crash it back down into the 40s and probably potentially into the 30s back down to this trend line. And of course, you're going to have one more chance around November 10th to break out and post that $39-40 million quarter and really bring the stock up back to $1. This, in my opinion, is a speculative play. Because, again, right now they're in the middle of this whole issue with NASDAQ compliance, and like I said, it closed like right here at the bottom of this trend line with this 180-day period coming to an end. So that's why. Now, right now, I would wait and see. But if it bounces off this trend line, and of course they file for that extension there for the NASDAQ compliance, then of course once I see it bounce up here again, going into like the higher 40s, you can see 48, 49 cents. Then I would say you can potentially roll the dice and try to get in and ride it from like 50 to 65 going into earnings. And long term, it could work out for you. It really could. But again, they've really been beating the stock up in the short term. So this is one of these situations where, if you're looking to invest, but this is money that you really can't afford to lose, or it's something that you really, want to be 99% sure is going to go higher, honestly, something like ENG, in my opinion, that's not really the spot. As of right now, where the company sits, this is more of a speculative play. This has to be money that you don't really care about, could drop, who knows, 30, 40, 60% from these levels, and you'll be okay with it. You're tucking it away for the long term, right? So again, if you have like $1,000 and you can't let it go lower, this is not the situation for you. This is more speculative. But again, once the company starts potentially reporting these increases in revenue quarter over quarter moving forward and starts to climb up, and we can see that there is actual growth and real potential for the stock, several years down the road, 3-5 years from now, the company is going to be worth significantly more, then we can possibly reconsider looking at it at the, just sub $1 or potentially around the $1 level. And then we can take a position on, because again, better to be safe than sorry. Because getting in now at 44 cents and then having them drop it down to 30 cents again is going to suck, and you're going to beat yourself up, right? But if you wait for confirmation of actual revenue and business growth, then you can step in knowing, okay, they just posted here 15 million, then they posted, 38 million, so we're projected, 50 and then 70, and I think the company could do it. They're looking good. Then you step in at around that time and ride the wave all the way back up to the 3s and to the 4s. And hopefully hold it for years, and it works out phenomenally for you. But, right now, little unpredictable. But, again, I think within the next couple of days, the next day or two, really, you're going to have a little bit more of a solid projection of what's going to happen here with the stock. But basically, that's it. That's all I have to say about that. So I'm going to leave it there. Once again, Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up helps out the algorithm, helps me get more eyes on the channel. Subscribe to the channel if you haven't already. And, of course, moving forward, like I always say, I understand that markets are rocky, and they're volatile, and they're uncertain. So I want to wish everyone success. I hope everyone makes a couple of dollars. I want to thank you guys for stopping by. Enjoy the rest of your weekend. I'll talk to you guys later.